Hello, my name is Nick Quinn.
And I'm Shane Vernier.
And I'm Connor Woods. We are the market analyst team at HowToTrade.com, and together we're going to explain everything you need to know about trading the three white soldiers candlestick pattern. So let's get started.
The three white soldiers is quite a rare candle formation. It comprises of three bullish candles in a row. Each bullish candle, the open of that candle has to be above the open of the previous bullish candle. That's what gives it its unique features. As a result, we're not going to see it very often in most asset classes, but you will find it in the stock market because of the gap that we have in trading sessions. What that also says as well is it tends to be more of a longer term candle pattern that traders might want to look for in a chart. You're probably not going to find it on an intraday basis. So let's break down exactly what you'd need to see to identify it on a price chart. So this is what the three white soldiers looks like. You can see it's a reversal pattern, and here they are, these three candles here, 1, 2, 3. Those three bullish candles, they make up the pattern of the three white soldiers. You're obviously going to want to confirm it with some support points as well, but it is showing us a lot of momentum now to the upside. As I mentioned before, the unique feature is the way that these candles are stacked. The open is always above the previous open in the structure itself. And there is usually a disconnect between the close price of the candle and the open of the previous the open of the next candle as well. But that is the structure of how it would look on the chart. The way that you would then trade it is you would trade the close of candle 3 up here, and then you would place your stop under the low of the first candle. But that is the way that we would go about identifying it on a price chart.
So let's have a look at how we can trade this three white soldiers candlestick pattern on the charts right now. Now, when we trade this like other candlestick patterns, it might not be enough on its own. So what we want to do is I'm going to potentially use a Fibonacci retracement to try and give us some extra confluence after. So what we're looking for is generally a market which is trending down, as we can see, and that's what's happened here, and with that series of lower lows and lower highs. And with this three soldiers formation, we're looking for three consecutive bull candles which really help create that V shape where we see the market reversal. So if I get my drawings on the chart now, we can see where that comes into play, and that helps create that V shape that we see here. So we know that this is a valid three white soldiers candlestick pattern. Now, it might not be enough to trade like that on its own. So what we're going to do is if we just get our Fibonacci and we draw from the high to the low here, for example, there's other ways you can do it. You can do it from the low to the high and just buy straight off the retest. But what I like to do is wait for this three white soldiers to break a key level. So what we see here is broken above this 38.2%, but then we get the retest here. So this would be a good chance to go long at the retest. So you would have been in a tiny bit of drawdown. Your stop loss just below the three white soldiers, and then we can target new highs. And you can see from there, we had a real change of shift in momentum, and this trade actually went on, if you held it for long enough, to make a fantastic 6.57 risk reward trade. And that's how we can use the indicators along with the three white soldiers candlestick pattern to really profit for some trades.
Okay, let's take a look at the pros and cons for the three white soldiers pattern. First, the pros. The three white soldiers pattern is easy to identify. It's visually striking and easy to spot in the live market. Number two, it's an accurate chart pattern, mainly when used in combination with trend reversal indicators and Fibonacci levels. So it works best when we use it with confirming indicators. And lastly, the three white soldiers pattern works on short-term and long-term trades. So no matter what duration chart you're trading, be it intraday or maybe even a swing or weekly charts, the three white soldiers pattern is effective. Okay, here are the cons. The pattern may produce false signals, and it frequently appears in the middle price range of a consolidation type phase. So when we see the market tighten up and flatten out, the three white soldiers pattern can produce false signals. And lastly, the stop loss distance is very tight, and it is not using Fibonacci levels. So when you use a stop loss with the three white soldiers pattern, it can be very, very tight, and that can force you to be stopped out prematurely on many winning trades. Now, let's review some of the key takeaways from the three white soldiers pattern. The three white soldiers is a bullish reversal pattern. It is made up of three bullish green candles at the bottom of a downtrend. Traders use the formation to identify the slowing momentum of an ongoing downtrend and find buying opportunities for the chosen asset. Now, to trade the three white soldiers pattern, a long position is entered once the third candle has been completed. Ideally, traders identifying the three white soldiers candle pattern should confirm the reversal with other technical tools. RSI, stochastic moving averages, and MACD are a few excellent complementary indicators. When trading the pattern, a stop loss is located below the first candle. Conversely, the take profit is located at the highest price level of the previous trend. Now, if you want to learn more about the three white soldiers pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to fit the three white soldiers into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience. Then, once you're ready, feel free to join our How to Trade Funded Trader program.